Everyone, welcome back to my YouTube channel. In today's video, I'm going to be teaching you how to start investing in the stock market. Right? If you have been thinking of investing in the stock market but don't know how to go about it, this video is actually for you. And it may interest you to also know that there are people here in Nigeria who are actually earning consistently. It's not because they work harder than any of us, but simply because their money is doing the background work that nobody is seeing. And to be frank and to be clear, they are not doing anything illegal. Yes, they are not doing anything that is complicated. And they just simply understand one thing that most of us actually ignored, and how to make money from the stock market, right? And the most painful part of all of this is that most people actually work for 30 to 40 years and they earn income. Now they earn income and they save little money and they still struggle financially at the end of the day. Not because they did not try, but simply because they never learn how to grow their money. That is one of the problems that we are having. You can see our grandfathers or our fathers who have worked in the civil service. At the end of the day, they retired and the only thing they depend on is their pension, which is very painful because how can you sacrifice your 30 years of life, but you cannot afford your basic need? You cannot afford to travel, you cannot afford to relax. At the point when you're supposed to be retired and resting, that is exactly when you started work again. So it is very painful, and that is why most people are actually going into this financial market or the stock market to actually know and to be sure or to help them preserve their wealth and also to stay comfortable, because you must not start a business. I used to tell people that if you have the money and you don't have the plan, you don't have the experience to start a business, you don't need to do that. You can go ahead and partner with somebody that already has a business, sign a strong agreement with that person, and at the end of the day, you can see that if the business do well, both of you will enjoy that, right? So you don't actually need to start a business when you have the stock market. I'm not saying that you should not start a business. What I'm saying is that there are things that when you look at them, when you look at the cost and when you look at what it will take you, you realize that it's better you find a partner or you invest in a partner, right? So that is where the stock market comes in. Now, like I said, most people will work 30 to 40 years, earn money, save a little money and still struggle financially. Not because they did not try, but because they never learn how to grow their money. So in this video or in this class, I'm going to be teaching you step by step how to start investing in the Nigerian stock market and even in the US stock market as time goes on, right? Even if you're a complete beginner. And by the end of this video, you will be able to understand, or you will learn how to you learn what you learn exactly what the stock market is, how to start with a little amount of money, with as little as 5,000, 1,000 naira self, and the exact step to begin with, and also the mindset that separates successful investors and everyone else. Now, the first question we are going to ask yourself is, now, what exactly is investing? What exactly is investing? What does it mean to invest? Now, investing simply means putting your money into something that has the potentials to grow over time, right? That's when you put your money into something that you believe that in the future it will increase the value of that your money. That is what investing is. So let's now look at a comparison. Now let's say Mr. A, I'm going to use a hypothetical example here. Let's say Mr. A saves 100,000 naira in his bank account. Then Mr. B also saves 100,000 naira in a strong company. All of them are savings. Savings in this case is that Mr. A saves in his bank account while Mr. B saves in a company. And while Mr. B saves his own money, the same 100,000 naira in a company, right? So saving in a company means maybe he invested the money. Let me use the word invested the money in a company, in a strong company. Let's take for instance, he invested in a bank, right? The same bank that is holding the other person's money, or he invested it in the bank. And after 1 year, Mr. A still has roughly 100,000 naira. No growth, nothing, but definitely they will find some changes and they will give him, right? And maybe slight changes, with slight little fractions on it. That is his 100,000. Now, the story of Mr. B is going to be completely different, in the sense that he will gain capital growth because he invested in the company, of course. He invested in the company, and with the expectation that the money the value of the company will appreciate, right? The value of the company will appreciate, and he's going to gain, he's going to be paid dividend at the end of the financial year of that company, and also a compounding return. Now, after that 1 year, Mr. A capital from increased from, let's assume, from 1,000, from 100,000 naira to, let's say, 110,000 naira. That is the share at the current market price of that company. The company share price appreciated, and he's gaining a 10% increase in his in the share price, right? So if he decides to go out of the market, he decides to sell his shares, that means he's going to get 110,000 naira immediately. While he also, in that, the same Mr. B has received dividend over time from that company. Now, for that 1 year, when the financial year end, that 1 year, Mr. B was paid a dividend, let's say a dividend of, let's say, 5,000 naira was paid to him as dividend. Plus, remember that what he invested initially is just 10,000 and 100,000 naira. At the current market price, he can sell that his position and gain 110,000 naira. And he has received what? He has received 5,000 naira as dividend. So in total, he's making 115,000 naira, right? While Mr. A just made a fraction of, let's say, 101,000 naira, because they will definitely pay him little amount of interest. That's if they pay at all, and they will also collect withholding tax from that. So that's the most in something very important that we need to pay attention to. Because most of us ignore that withholding tax aspect. Now, between Mr. A and Mr. B, right, who made the wisest decision? Of course, it's Mr. B, because he invested the money, and this is what our fathers have not done. This is what is making our fathers complain today. Pension alone cannot guarantee you a lifetime happiness after your retirement. Pension alone cannot do that. Even the money you are keeping in pension, people, they are paying you interest, of course. The people you are leaving that money, they invest that money in something bigger, that they are paying you that interest. If, for instance, you invested your pension, you contributed money with your pension contribution is 1 million naira at the end of your service, right? And you are paid interest of, let's say, 500,000 naira. I want you to know that that 500,000 naira is not even a to third, it's not even up to a fraction of what those people have made with that your money over the course of your service. So that is one thing you have to bear in mind. Am I saying that pension contribution is bad? No, pension contribution is not bad, right? But if you are doing things, you should do it with a high with when you are planning your future, you should plan it in a way that at the end of the day you are not going to suffer much, right? So that is another thing. So Mr. B actually made the wisest decision by investing in the stock. Why? Because one, he gained capital appreciation, right? And again, he gained dividend income, and has a compounding return. So this is the difference between savings and investing. So in savings actually protects your money, while investing grows your money. The stock market is simply a marketplace. It's a place where ownership in companies is bought and sold. What does it mean? When you enter the market, you want to buy something. Of course, there is you, the customer, who wants to buy the thing, and there is there is the vendor who wants to sell the item you are buying. So the stock market is just a market specifically for trading stocks or for buying and selling of stock. So now you have to also understand that when a company wants to go into the stock market, it goes into the stock market through what is called initial public offer. That's IPO. Just as we are expecting Dangote to be listed in the Nigerian stock market between from May to June, maybe we see how to go about that. So this class is actually coming at the right time, when everybody is expecting that Dangote will be listed, Dangote refinery will be listed in the stock market, so that we can go through that, we can buy the shares through the initial public offer, which is the IPO, right? Now, for companies that go through the IPO, we say that they are coming through the primary market, and through the primary market. And while those that are traded in other platforms, like after the initial public offer, is now through the secondary market, that means you're buying from another person that already has the share of that company. Now, like I said, the stock market is simply a place where ownership of companies is bought and sold. You buy shares and you sell, you sell shares from there. Now, for instance, when you buy shares in a bank, just like let's just say as a bank like GTB or Zenith Bank, you are not just buying a stock. You are not buying a stock. You are becoming a part owner of that business. So that is what it means to own a share or to be part of a company, right, through the stock market. So if the company grows today, now your investment will also grow. And if the company makes profit, you can also earn dividend from the profit of that company. Now, this is where many beginners actually get confused. They think that stock market is actually gambling. Stock market is not MMM. Stock market is not going to promise you 100% return in 2 weeks. No, it doesn't do that, right? One of the guiding principles of the stock market that you have to bear in mind that in a particular day, there is no stock that will go above 10% in revenue, in gain, I mean, in capital appreciation. There is no stock that will go above 10% in one day, and there is no stock that will go below 10% in one day. It is not possible. It is not possible. It is highly regulated, so your money is always safe. If you can have patience, you will experience that you will enjoy the stock market. Now, from January till today, which is now April 26th, right? The stock market have made over 40% in return. It has made over 40% in return. So imagine you invested from January till today. That means your total return is over 40% of whatever you invested. So if you want to get out of the market, you can actually do that and you gain a lot of money. And people are doing it and they are living quite fine, right? Now, the stock market is highly regulated by the Nigerian Stock Exchange, and yeah, when it comes to gambling, gambling is guesswork. But investing is understanding what you're investing, and you actually feel ownership. You'll be part of that company. You own that company. You understand the company. You know what the company does. You know the product. You know the location of this company. So it is not gambling. You are actually investing based on what you know. While gambling is guesswork, you are guessing or you are predicting that this thing is going to happen like this, that this thing is going to happen. Like if it happen like this is what you are going to. So it is not gambling. Investing is actually you are investing based on what you already know. While gambling is that you don't know the outcome. You are just guessing that it will happen like that. Now, the next thing I will want us to know to wrap this section is that before we even talk about the steps and on how you can start investing in the stock market, we must first of all fix our mind, right? We have to fix our mind because this is where most people actually fail. The stock market is not number one a get rich quick scheme. Like I said, it is not MMM, it is not CBEX. It is not for a place for overnight success. It is not a short time and it's not a shortcut to wealth or to success. You cannot use the stock market and say you want to make money immediately. You want to go into the stock market and you want to actually make money instantly without actually putting in the effort. Without, let's say, you invest money today, right, and tomorrow you want the money to double to 50%. You are a criminal. I'm serious. If you are thinking like that, you are a criminal because the way the stock market is structured is that, like I said, 10%, the stock market cannot gain more than 10% in one day, and it cannot gain more than it cannot lose more than 10% in the same day. So if you are making gain in the stock market, it's going to be gradually. It's gradually. It is not something you rush. It's not a shortcut to wealth, right? So that is one thing we have to understand. It is a system for building wealth over time. It is a system for building wealth over time. You don't rush it. You take it gradually, right? It will take you. You have to take it gradually. Just take it slow. It is not a place where you come and invest and you expect the return to just in one week, boom, you are making 400%. Haba. If it was that easy, everybody could have been a billionaire now, right? So that is one thing you have to bear in mind. So let me now give you the real life perspective of what the stock market is. So if you plant a tree right now today, right, you don't expect that the tree will start bearing fruit immediately or tomorrow, but if you consistently water that tree, over time it becomes a source of what? Continuous harvest. That is exactly how the stock market or investing works, right? Stock market investing, that is exactly how it works. Now, the next stage, having addressed our mindset towards what investing is and what to expect and what not to expect from the stock market. The next thing is to look at the step by step on how we can start investing in the stock market. Right now, to get your number one step is get your finances ready. Yes, you have to get your finances. You don't just go into the stock market because this person told you, Mr. A told you that this stock is doing well, and you just go into the stock market and you start investing. No, you don't do that. You don't do that. It will not favor you at the end of the day. You will regret it. Now, the first thing is to get your finances ready. Before you invest, clear all your urgent debts. Yes, clear all your urgent debt. Don't owe anybody and go into stock market, because at the end of the day, you end up selling off that your position to clear your debts. No. And if you are investing with the expectation that the returns you are going to get from the stock market, and that's what you're going to use to clear your debt, my dear, you're just wasting your time, because there's already an expectation, this urgent need to clear your debt. That means anytime your debtor or your lender pressures you, you go out of the market. And if you go out of the market, you may not make the maximum, or you may not enjoy the return that you're supposed to enjoy. Right. So that is one thing. Clear your urgent debt immediately. Now, build a small emergency fund before you go into the stock market. Don't carry all your money and put in the stock market. The stock market is volatile. It can go up, it can go down at any point in time. You can lose for the next 3 months. You can lose your money will be reducing in value. The one beautiful thing is that your stock quantity is always intact. It is not like forex trading, where if you put your money, the money disappear, boom, you don't have it again. No, the stock market, your quantity, the stock unit you have is still there. It's just that the value of that stock has reduced, right? But with time, it will still appreciate again. So far that company is doing well, it will still appreciate and come up again. That's one thing you also have to bear in mind, right? So never invest money you will never you expect next week. If you are expecting to use that money next week, don't invest it in the stock market. No, it is not. It doesn't work like. At least invest for 3 months. At least if you are investing in the stock market, put that money in that market for 3 good months. Then you appreciate what that return is going to be. Now, the second thing is you have to open a brokerage account. Open a brokerage account. Now, I will do another video on how to open a brokerage account, and different types of different brokers that we have in Nigeria that are fully licensed and operational that I'm using currently. I will show you how to do that. What affect most of our forefathers that have invested in company of shares before now is because they were not rampant technology the way we have them today. So people actually did not some people did not pay much attention to that. But if you still have some documents that relate to old shares, and you believe that the companies are still in existence, you can still claim them even up to today. If you have never been paid dividends, you can still claim those shares if you have documents that can back your claim up. Now, so you have to open the second step I said is open a brokerage account. Now, to invest in Nigeria, you need a broker. Now, a broker, this is your gateway to the market. This is just the person that will place in your order. The stock market head office is in Lagos, right? The head office is in Lagos. We have Abuja, we have Onitsha, and other regional offices across Nigeria, right? But we don't have to travel all the way to Lagos, Abuja, or Port Harcourt, or any other place that the stock market is located just to invest, right? With the technology advancement of technology we have today, at your comfort in your house, you can easily invest in the stock market without actually traveling or spending a lot of money. Just download any licensed broker app and you are set to go. So now, that's your, like I said, that's your gateway to the stock market. Once you open a broker account, once you open an account, you have to fund it. That's you have to put money in that account. Don't worry, your money is secure, 100% secure. It's not a problem. You can now start buying shares of company of your choice, right? But make sure you always do research, and you can track your investment. You'll be seeing it. It's not something that is hidden. You'll be seeing it. You track your investment at every point in time. That is where, and that is how you know whether the stock is appreciating, whether the stock is going down. Unlike those days when you just invest in a stock of market and you don't know whether the stock is appreciating or it actually depreciating. So it is no longer that way. So if you have a licensed broker, a licensed broker, and you can start tracking your investment. And don't worry, I'm going to do video on how to open any of the brokers like AfriInvest, like Bamboo, like Invest Niger by Chapel Hill Deham. We have the Coronation. We have different broker app that you can use, and I am going to do video on all of them. One of all the brokers that I'm using, I'm going to do video on all of them one after the other so that you can follow through and start taking advantage of it. And also, it will get you prepared for Dangote initial public offer for the sale of to become a partner or a shareholder in Dangote refinery. Right now, the third thing is don't rush it. Start small. Don't rush it. You don't need millions to start investing in the stock market. With as little as 1,000 naira, you can start. 5,000 naira, 20,000 naira, 50,000, 100,000 naira. The goal is not to go big, it's not the size. The goal is consistency and learning as you go. The goal is not to go big, just start small. That little amount of money that you think you don't need immediately, just carry it and put there, right? Carry it and put there, or make provision separately for that. That okay, this amount of money, this is what I can be able to afford at the end of the month to be investing in the stock market. 10,000 naira, 5,000 naira, 10,000 naira, 20,000 naira, 100,000 naira is not too small and it's not too big, right? You can start from there. The goal is consistency and continue learning. Now, the fifth step is the fourth step, I mean, choose strong companies. Choose strong companies. Don't just go into the stock market and start investing. No, you have to understand the companies you are investing in. For instance, you can, because you are a beginner, you can go with popular companies. Yes, you can go with popular companies that you know that their name is strong. If you want to go into the banking sector, it's not a recommendation. I'm just saying for the purpose of teaching. If you want to go into banking, you can say, okay, Zenith Bank is a very big bank, Access Bank is a very big bank, Fidelity Bank is a very big bank, and what again? We have UBA is a very big bank. These are strong banking companies that you can actually put your money there and you have peace of mind. In fact, I have students who actually prefer banking stock than any other stock because banks are highly regulated, and that is why people trust bank. Nothing is going to happen. Banks are highly regulated, right? People trust bank the more. And we also have the food industry. We have the likes of Dangote, we have Boa, we have industrial goods industry, which is have to do with the cement and every other thing. You can look into that. So, like I said, focus. You can for a start, you can focus on banks, consumer goods, and established companies. Consumer goods and established companies, right? So you can focus on banks, you can focus on consumer goods, and you also can focus on established companies that you know what they actually do. That is where your peace of mind comes from. That you know what they actually do, know what somebody told you that they are doing, that you actually believe in what they do, that even you yourself you use their products or services. So those are the kind of companies you have to look for. Now, another thing you have to pay attention to in this step is now you have to pay attention to what their profitability. You have to pay attention. You have to be on the look for their profitability. That means their financial statement is for you to be successful in the financial market. Financial statement, studying financial statement of companies is now going to be your go-to thing. You have to look at their financial statement. Why are you looking at their financial statements? You have to look at their profitability. Is this company profitable? If the company is profitable and is doing well over the years, then it is another thing to consider, right? Then you have to look at the consistency in their returns. How consistent is their revenue? If they say they made 5 billion naira this year and last year they made 6 billion naira last year, and the other year they say they made maybe 8 billion naira. So you begin to ask yourself, why is their revenue declining instead of increasing? I'm giving you just an instance. If they say they made in 2024, they say they made 8 billion naira. In 2025, they say they made 5 billion naira. In 2026, they're telling you that they made let's say 3 billion naira. So you begin to ask yourself, this company is not progressing. So actually, this company is going down. So in that case, you need to drop that company, or better still, it is your choice, right? If you're looking for price appreciation, capital gain, then you can go ahead and invest. But otherwise, that is not a good sign of a company that is progressive, because they are actually going back, right? Then the fifth thing that we need to know, the fifth step, that is step five, that you need to know: invest and hold. Don't just invest and immediately you're selling off because you see some little thing. You invest, hold it for a while. This is where discipline comes in, right? The market opens up, the market goes up and down, but strong companies recover, grow, and reward patient investors. That is very important. When you invest, you hold for a while. Like I said, hold at least for 3 months. Hold your position for at least for 3 months. Like, if you hold your position at least for 3 months, you will see the wonders in the stock market, right? You will see if the company was going down before. If you have more money, put money in that company. If you believe in that company that they will recover, put money. That's the time you need to get more of the company shares, right? Now grow. Now you see the company, strong companies, like I said, the prices can go up and down, but with time, the company will recover, grow, and reward you for your patience, right? So that is that on that. Let's also look at the biggest mistake beginners make when they start investing in the stock market. Number one is that they are impatient. People invest today and expect profit tomorrow. It's very bad, right? So when it does not happen that way, they will now begin to panic and they will start selling and losing money at the center. It has happened to me. It has happened to me in 2024. I bought a share of a company. I bought a share of a company, and the company was actually doing well. Then, so I decided to go back, but all of a sudden the company started going down drastically, and I was scared that, oh, my money, I lost for the 3 months period, I lost over 50% of my investment. So I was so scared. I don't want to lose all my money. But guess what? Immediately I pulled out my money from that place, I sold at a loss, like at a mad loss. This company did well the following month. Like, it's just like every day consistently, the company is hitting 10% gain. Every day consistently, it was hitting 10. I was so mad at myself. Only if I could uh, have patience with the company, and it will actually reward me very well, right? So that is one thing you have to know. So you cannot just invest today and tomorrow you're expecting the company to do well, and if the company did not do well, you are panicking and you start selling off your position. In that case, you'll be losing money. You have to understand that wealth in the stock market is built slowly but powerfully. It is built slowly but powerfully, right? So the next thing is how wealth is actually built in the stock market. Now let's break it down. If you invest 100,000 naira, right, in the stock market, now you earn capital appreciation and you also earn dividends. I have said this before. Then you reinvest. When you earn this, yeah, you reinvest that your dividend, because that dividend you didn't work for it. Actually, it's your money that worked for it. So in order for you to send your money to work again, you reinvest that dividend. Reinvest the dividend so that the dividend will do something for you again. Reinvest that money in that shares or in another share or in another investment, so that the money will actually be multiplying, right? Reinvest it. Over time, you will see that your money is growing, your return is increasing, and your income is compounding. This is how small money becomes a big money at the end of the day, not by luck, but by consistency and timing. When you invest in the stock market, all of this will multiply and give you a heavy amount of return. Honestly, you may not become rich in 3 months in the stock market, no, but in 3 years, 5 years, and 10 years, your financial life can completely change. That is the truth. Your financial life can completely change. The stock market is powerful, right? We have seen people who are actually making. We have seen people who are living up whatever they receive from the stock market or financial market as a whole. So now, to bring everything together, if you remember nothing else from this video or from this class, right? You don't need to be rich to start investing. That's one thing I want you to bear in mind. You don't need to be rich to start investing, but you must invest to become wealthy. Start small, stay consistent, and stay consistent, and be patient, and let your money start working for you today. So thank you very much. If this video was actually helpful, yeah, if this video was actually helpful, please like, share, and subscribe. In the next video, I'm going to show you how to choose a broker and how to start and wait for Dangote initial public offer. So thank you very much. Do well to subscribe for more videos like this.